Good evening. This is the video newsletter for Buy Sell Short for Tuesday, May 17th. Going to be a really short video just because we're not in a whole lot of stocks right now. Back to an extremely high cash stance right now. As I mentioned in the alert, I gambled a little bit on the market, went against my own thoughts on the market over the last couple of days, and paid for it dearly over the last couple of days. So that was time for a flush. And flush is what I did. 90% cash right now, down to my four favorite plays right now, and continuing to keep what I said last week that I should have listened to, half position stance on any new buys, and just look to take any gains that are out there. Really, the reason for the market drop, there's a lot of stuff out there. We've got expectations of QE2 ending. We've got economic data starting to slow down, and the reason for that is a huge cutback in federal and government or state government spending, and it's just happening at the wrong time, right when the economy is starting to pick up steam. Here we are, taking away the punch bowl a little bit too early. We've got economic data not as good as we thought it would be. Earnings. Traders are just really skittish right now. We also have worries about the debt ceiling getting extended, etc., etc., European debt issue. I could go on and on. Market is not well right now. But, from that 150-point drop we had and the really bad drop in Hewlett-Packard, we had the NASDAQ and slightly green. And then we've had a couple of tech stocks beaten after hours. Now, what I would really like to see happen is the market gap down hard tomorrow morning. But what'll probably happen is it'll gap up. Not what I want to see. Gap down, I'll be a buyer. Gap up, I'll be sitting on my hands. Looking at the daily chart here, what I'm fearing right now is, you see the setup we have here on the Dow daily chart? I'm fearing it's mirroring what we saw in February into March. We had a sell-off. We had a recovery, and then we had a big drop down through the 50-day moving average. Here we have the market over the last couple of weeks. We had a sell-off, a recovery. Things looked really good, just like they did back here. And now we're having a sell-off again, and we file ourselves right at the 50-day moving average. Now the NASDAQ, Dow, a couple of other indices are right at some key moving averages. So we could, and we did back here, see a bounce back in the market. What I want to do is not get sucked in case we do get a break below that 50-day moving average at 12,357. We could see some serious downside moves in the market. We've got RSI breaking 50. Stochastics is at, an oversold level, but I'd rather be safe than sorry right now in this market. 15-minute chart, I redrew it. You can see right now, we've got resistance probably at the 50-day moving average, 12,519. Downtrend support now, 12,300 area. Quick look at the Russell. Check out the Russell. Last, 4 days we are down 5% in the Russell 2K. So if you're looking at your account and some of your stocks and going, what the hell just happened? This is what has happened. Just decimation in small cap land. PopScan, down to 15 plays, not exactly a buy signal. I'm not ready to buy anything right now. I'd rather just sit on my hands. Sometimes the best trade is no trade. And again, like I said, I'm a little bit worried about this setup here in the market happening over the next few days. We do have options expiration that could, skew the market over the next couple of days. But any trading I'm doing, I am doing it intraday. I'm staying very, very light overnight. If I miss some profits on the upside, so be it. I'd rather trade when the odds are in my favor than hoping the odds are in my favor and, seeing something like what happened today happened again. As a side note, some of you guys in the chat room know, I ended up ignoring my rules last week. Thursday, Friday, I ended up going 50% long the market. I went overloaded, some biotech stocks. Didn't listen to my own advice about being in half positions, went into overloaded positions. And as a result, yesterday, brutal. I believe it was one of my worst daily losses in quite a while. So today, came in, didn't see a bounce in the market. Time to correct the mistake. Sold all but my favorite few stocks and just raised cash levels. I don't care if those stocks bounce again. I can always rebuy them again. You know, the losses I suffered yesterday and today, it's not like I'm not going to make them back. And that is the mindset you need to have. When you make a mistake, you identify the mistake, you correct the mistake, which is exactly what I did. You know, I'm fine sitting on my hands for the next couple of days, seeing some trades work, you know, paper trading some trades. And then once I'm get my confidence level back and that the odds are in our favor, move back in. You know, it only takes a nice little bounce, you know, 1 week rally, all the losses are back and, you know, you're positive again. So that's how I'm approaching this market right now. Very dangerous market. I really hate May and June when it comes to the market. Just a very iffy market, a lot of headwinds out there. And, you know, after today's scary little shakeout, watch tomorrow. Watch some. What I'm fearful of is this kind of candlestick tomorrow where we see, you know, 100-point bounce on the Dow to suck everyone in, and then they pull the rug out again. So that is something to keep in the back of your mind if you're going out there shopping. Now, ideally, this is what I'm looking for. I would love a gap down tomorrow to the 50-day moving average. So what, 100-point gap down early in the day. That would be a gap down that I would buy. Now, if we gap up tomorrow, I don't know. I might continue to sit on my hands and see how the Dow acts at the 20-day exponential. If you note, when we did that big sell-off in March, we weren't able to bounce back through the 20-day exponential. So I will be watching that 12,582 level over the next couple of days as a possible signal to get back in the market. So that's where we are right now. High cash. A new strategy that a lot of you might want to employ is keep your plays to 2 weeks. If you're sitting on a stock for 2 weeks and you don't have gains on it, sell it. Move on. Don't be going into that long-term mindset. Keep the long-term plays in your long-term account and just be looking to churn and take small gains intraday. So that's it for the video. Any questions, definitely feel free to send me an email. Otherwise, I will see you guys in chat room tomorrow. Good night.